Hello and welcome to Financial Modeling for Business Plans. In this first installment, we're going to be creating some generic statements without any specifics in them, without any numbers at all actually. We're just going to be creating the statements that you're going to need. We're going to be using Excel, and we're going to be putting them in a form that's going to be easy to read and more or less in line with what someone who's looking at your final business plan would expect to see. Okay, so first we're going to start out, we'll rename sheet 1, and we're going to call sheet 1 Statement of Assumptions. Then we're going to add some sheets down here. We're going to add 2, 3, and 4. And actually this is going to get pretty cluttered if we do this, so we will rename this OA. Then the next statement, the next sheet is going to be the income statement, so we'll just call it IS. Then we're going to have the balance sheet, so we will rename it balance sheet. And the third statement will be the statement of cash flows, so we'll call it statement of cash flows. Now we may need other sheets as we go along. Some sheets that we might need are capital budgeting. We might need operating budget. At some point, we're going to have a break-even analysis. So we'll go ahead and put that in here now. Break even. And one common sheet that gets used a lot is depreciation. So we'll just make a depreciation sheet right now. We're not going to worry about perhaps for the entire time we do this filling all of these out. But it's good to know everything that we're going to have and be dealing with. Alright, so first let's talk about the form of the income statement. So we'll go to the income statement. It doesn't look any different than any of the others right now. I'm going to pull up there we go. And you won't be able to see that, but I'll be using it to generate the sheets. So let's just copy I'm copying the first 5 rows of the sheet, and I'm just going to paste them in here. Click the whole sheet. There we go. Alright, now in the top line we're going to put your company. This information here is not truly necessary, but it's nice to remind people as they read your business plan that this isn't a publicly available document. So for your income statements, income statement is a statement of what happened over a specific period of time. So I have the month ending January 31st, February 29th, March 31st, and so on. And the way you do that is you put in the first date, and then usually if you put in 2 or 3, then you highlight those and then drag them on out like that, and you drag them out as far as you need. In this case, I drug it out for 3 years so that when we build our statements, we will build them 3 years at a time. Okay, so next thing, copy, paste. What I've done here is just made a nice clear delineation of the document. This is just a matter of preference and a matter of when we print it out so that everything is clear what it is. When you build an income statement, you start out with sales. And then after sales, you're going to have cost of goods sold. I'm leaving some spaces in here because there may be pieces, parts in here we want to add in as we go along. We can always add more rows also. You guys know that, I'm sure. Okay, so sales minus cost of goods sold equals gross margin. So we'll put that in here. After gross margin, we list our operating expenses. Then we list, now under operating expenses, the traditional way that you show something's under something else, you guys probably already know this, is you would say, for instance, selling expenses. And if this is a category, then on the next row, I went in 2 when I wrote selling expenses. And if I'm doing a subcategory of selling expenses, I might indent in again another couple spaces and write sales person's salary. And then again, I might put advertising, and so on and so on. So after our operating expenses, down here further, we would have general and administrative expenses. And this might include things such as salaries for non-sales, non-manufacturing. That means not the people who make the product, not the people who sell the product. It would be appropriate to put depreciation here, rent, and so on. After that, at some point, we're going to have EBIT, which is earnings before interest and taxes. And then we're going to have interest expense. And then after that, we will have EBT, which is just earnings before taxes. Okay, I can put that in there, I guess. Okay. Then after earnings before taxes, let's scroll up a little bit. We're going to end up with taxes. Then we'll be left with earnings, which we call net income. Now, what I like to do on income statements is put another line down at the bottom. This is not necessary, but I like to know over the 3 years at any given time how much the venture has made so far. So we put cumulative net income. Now, this is the basic structure of our balance sheet. We'll have lots of specifics that come from our research that will go into various places. If we take out a loan, we'll know what the interest rate is, and that will help with the interest expense. If we buy some heavy equipment and depreciate it, we research that to figure it out and figure out how much to put in there. Okay, so the next sheet is the balance sheet. Now, what I like to do is have the balance sheet have generally the same look. So I copy, and then I come in here and I paste special, and I just paste formatting. So that gives us the same look. Now, since we're balance sheet, we can just we'll copy this stuff again and put this in here. Now, as I understand it, the balance sheet is a set moment in time. So it wouldn't be for the month ending such and such. It would be for a specific day, because it talks about what your situation is on that day. But that's okay. We can still copy, and I'll just copy the first 5 of these to show you what I mean as far as dragging them over. I'm sure most of you know this, but if you don't, we'll paste them in just as they were. And so now, if we just grab a few of these and drag it out, then it'll fill in. And if we stop over where, oops, okay, so that's April 30th, 2019. For some reason, sometimes this shows what the end block would be. It's showing it, if you can see this, while I'm dragging it, it shows it up here. But it's not showing it right down here where I'm doing it. If we go to the income statement, we see I already pre-plotted out 3 years, and we know it's 12/31/2020. So we watch up here for, it's showing it kind of off the screen. That's weird. Well, let's drag it out, and we'll just keep doing it because it appears. I'm going to drag it. Oh, it's appearing on the black line, that's why. So April, May, June, July, August, September, October, November, December. So there we go. That's the balance sheet. All right. Now, for the balance sheet, it's set up in a similar manner as the other, in that it has a lot of the same things, or it doesn't have the it's showing. Okay, so if I could edit this, I would edit out the last little bit that I said, but I can't. So I'm going to just pretend I didn't say it and move on. The balance sheet shows your assets, your liabilities, and your owner's equity. So the first section is assets, and then we'll go down a little bit, and then there will be liabilities, and go down a little bit, and there will be owner's equity. Okay, and that's the total. That's the whole thing. Under assets, we might have a couple categories. We'll have current assets. Current assets are things that are easy to get rid of, things that you could sell, things that have value right now. Cash is a current asset, so let's go ahead and put cash in here. Other things that might be a current asset would be inventory, prepaid expenses, and then there, as I said, there are other kinds of assets. I want a little more space in here, so shoot, didn't mean to do that. Copy, paste, paste, paste. Okay, let's just do this. Let's escape, and let's anyway, insert. There we go. Now we have no space. Alright, so after our current assets, we will do non-current assets. So just space in twice, call them non-current, or long-term assets is another term you will see. And non-current assets are things that you can't turn into cash quickly, like equipment. And let's just put accumulated depreciation. I'm pretty sure I spelled depreciation wrong. Oh well, we'll move on. Now if you add up your current assets and your non-current assets, then you get your total assets. So at some point, we're just going to sum all of these columns up for this answer. Now, under liabilities, there's a lot of liabilities that you can have. Now, you can have short-term liabilities and long-term. Let's do this. Let's. I always do that. There we go. Copy. Now I think there's an insert copied cells, right? Yeah, insert copied cells. That way you can do 3 or 6 at a time. Copy. Insert copied cells. That should be plenty of space. Okay, so we'll have short-term liabilities and long-term liabilities. Short-term liability might be a line of credit, accounts payable. Okay, that was no good. Okay, line of credit, accounts payable, and so on. And long-term liabilities might be loan. I'm not sure. Long-term liabilities typically are over 1 year. It wouldn't be necessary to put that on this sheet, but we're going to do that. So this would be loan payments that you're going to make, or a loan that you're going to have over a year. And another, it's also a loan, but typically listed separately, is a mortgage. So a mortgage would be another example of a long-term liability. The next category is owner's equity. And owner's equity might be common stock. That's most common. The other most common is retained earnings. So those would be the most common forms of owner's equity. Now, the definition of owner's equity is actually the residual interest in the assets of the enterprise after deducting all of its liabilities. Put more simply, the owner's equity is just the owner's share of the assets of a business. So it's how much of the business do the owners own. And usually, it's actually always, I don't know why I said usually, it's assets minus liabilities. So everything you own as a business minus everything you owe other people for, everything that's left over is the owner's equity. So that's pretty much how that whole sheet will work. It'll be just a math problem of all of the assets plus all of the liabilities minus will equal the owner's equity. If there's no retained earning, then you'll just list it as stock or partner shares if it's a partnership or that sort of thing. Okay, on to statement of cash flows. The purpose of the statement of cash flows is to make sure that you don't run out of money, cash, to pay things off. So to set this up, we're going to set it up in a very general way, similar to the last sheet. Paste, formatting. So it looks pretty much like the other one. Back over here. And copy statement of cash flows. Now we typically break these things out to the month. So I'm going to write this as for the month of. And this, when you follow a statement of cash flows, you might end up with a similar you might still end up with a problem. For instance, something might be due on the 1st and you don't have enough money in your account until the 15th, but at least every 30 days you will be covered. And you'll see more about that as I go through this. So let's take a few dates again and copy those. Actually, let's not. Let's just go over here and we'll put January, February. Is that right? Yeah, we'll find out if it's right. Because when I do this and drag it down to, and we'll drag it down It's a long ways, probably way longer than we need it. I think that's probably 3 years. I need a higher quality mouse, or just more coordination. Okay, so for the month of January, February, March, and actually we started this in 16, so we'll go ahead and do this, see how this works. I've actually never tried this before. See what that does. Okay, so I don't like that. So we'll format it, and date. I just want month and year, so let's go with that. Alright, so that's good enough. Now we can drag this, and it says the same thing, so we have to do oh, look, it figured it out. Awesome. Now it should figure this out for us. December 2020. There we go. Now we'll get rid of these because we don't need them. Alright. Now, that's general format. Not super important about the way things look, but it helps keep track and know where you are. So when we're doing the statement of cash flows, we begin with the beginning cash balance. The first day you're in business, that's going to be everything you have. After that, it's going to be a calculated matter. Actually, you can look at your cash balance and say this is actually how much I have on this day and put in there, but it should match. On February 1st, it should match what you calculate it to be. If it doesn't, then you have a problem with your bookkeeping system. Okay, so we start out with our beginning cash balance for January 2016. Then we're going to have our cash inflows. And our cash inflows are going to be net sales for whatever product or service we're selling. Perhaps other things that we can use. Say we have a line of credit and we draw on that to keep our cash flow, or to keep our cash balance at a certain place. So there might be other places that cash come in. For instance, we might have some sort of investment activity that ends up giving us money. That's not so. Let's say we own some land that we're not using and we rent it out on a monthly basis. So we might have lease of land. Now that's just an absolute made-up thing that might be true for your business or might not. But anyway, the point is you start with your cash inflows and you put them all in here. Cancel. Next, we look at cash outflows. This is everything you spend money on. So if you're going to make a lease payment, your lease payment will be in here. If you're going to have an electric bill, it would be in here, for example. If you're going to spend money on advertising, it would be in here. It's only in here if you actually spend money on it, and it's only in here if you actually receive money for it. For instance, if we make a large sale to an institutional customer that's going to pay us in 90 days, it doesn't go in here. It does go in your income statement, but it won't go here. If we buy the things that we're going to use with cash, they go here. If we buy, for instance, let's put inventory purchase. So we buy some raw materials. If we're going to pay for them in the same month we purchased them, and we're going to purchase them now and pay for them now, then they go here. If we're going to pay for them next month, then that would go over here. That's how this whole thing works. Now, we have cash inflows, cash outflows. So under cash inflows, oftentimes we have total cash available, which is the total of all the stuff that comes in plus the beginning balance. Then we have total cash disbursements, and that is all of the money we spend. Pretty simple. And then we subtract those two, and we have a cash surplus or deficit, and that number ends up in here. Now, I always format this row in a very specific manner. I format currency, and usually I pick the red without the parentheses. You can do what you want, but you want to make sure that anytime this number is below 0 in this, that you know it. I find tracking pennies on a pro forma statement 3 years out to be ridiculous, so I usually do 0 decimal places. So now, if we end up with our account being $5,000 overdrawn in here, it'll show up as $5,000 red. That's a handy thing, and it's a quite literal red flag for you. It is very important that not end up that way. So that pretty much covers your cash flow statement. Sometimes sometimes people combine your loan stuff into a cash flow statement. Sometimes they don't. Your loan payment absolutely has to be. But other than that, so your loan payment, if as you pay it, would be in a cash outflow. But you can use this, you can sort of have a separate subsheet on the bottom to keep track of your loan position if you like, or you can have that broken out into another sheet. Okay, that concludes the setup of our three main statements. Our income statement, our balance sheet, and our statement of cash flows. Now the numbers we're going to deal with in the next installment, some of them, and the items on the left, the actual physical, exactly what constitutes income for your income statement, what constitutes an expense on the balance sheet, what is an asset and what is a liability. These actual items are all very specific to your business. It should be fairly obvious, and in most cases it is, what they are, but they are super specific to your business, so I can't put everything that could possibly be in here on your business. You just have to put those in there yourself and fill it out. If you use this sort of a format, everything will be in a place where when I go to look for it, or when someone who wants to lend you money or invest in your company goes to look for it, they will see things where they feel they should be. All right, that's it for this time, and we will do more with the next installment. Thank you.